Hello everyone, welcome to the market opening bell for Wednesday, April 2nd. Hong Kong stocks ended up in volatile trade on Tuesday. The Hang Seng Index opened 97 points higher and later expanded its gains, reaching a peak of 23,456 with a rise of 337 points. However, the gains narrowed at 1 point to just 3 points at 23,123. The index closed the day up 87 points or 0.4% at 23,206. The Hang Seng China Enterprises Index rose 20 points or 0.2% to 8,537, while the Hang Seng Tech Index gained 12 points or 0.2%, closing at 5,407. The total market turnover for the day was 250.2 billion Hong Kong dollars. Mainland Chinese markets opened higher and performed well in the morning session, but the three major indexes diverged in the afternoon. The Shenzhen Component Index and Chinex Index erased the gains and closed lower. The Shanghai Composite Index hit a high of 3,357 and closed out at 3,348, up 13 points or 0.4%. The Shenzhen Component Index peaked at 10,581 but closed at 10,503, down 1 point. The combined turnover of the Shanghai and Shenzhen markets was 1.1322 trillion yuan, a decrease of 89.2 billion yuan from the previous day. The renminbi US dollar midpoint rate was set at 7.1775, up 7 pips from the previous day's rate. On economic data, the Caixin China Manufacturing PMI for March was 51.2, up 0.4 percentage points from February, marking a new high since December 2024. In the Hong Kong stock market, the spread of an unidentified respiratory infectious disease in Russia, combined with rumors of a mainland Chinese document optimizing centralized pharmaceutical procurement policies, triggered a surge in some mainland Asia pharmaceutical stocks, with several hitting the daily limits. Hong Kong listed pharmaceutical stocks also surged, with Acasol and Remgin, which featured in our stock pick a few days ago, both rising over 10%. It is understood that the draft document titled Proposal for Further Optimizing Drug Procurement Policies consultation draft has been circulating within the industry recently. Phrases such as new drugs exempt from centralized procurement have alleviated market concerns about pricing pressures on innovative drugs due to bulk procurement. This year's government work report also mentioned optimizing drug procurement policies and strengthening quality assessments and oversight. According to the National Healthcare Security Administration's plan, the 11th batch of national drug procurement will commence in the first half of 2025, with procurement rules expected to shift from a lowest price orientation to a balance of quality and cost. Meanwhile, over the past 2 weeks, companies like Harbour Biomet, United Laboratories, and Hengrui have secured licensing deals with initial payments nearing 200 million US dollars and totaling several billion dollars. Additionally, Innovent Biologics became the first to achieve profitability through overseas licensing fees, providing further impetus for pharmaceutical stocks. In the automotive sector, companies released their March sales results. BYD reported sales of 377,400 new energy vehicles in March, a year-on-year increase of 24.8%. Cumulative sales for the year reached 1.0008 million vehicles, up 59.81% year-on-year, achieving just 18.2% of its 5.5 million vehicle sales target for the year, below the 25% passing mark. Li Auto delivered 36,674 new vehicles in March, up 26.5% year-on-year. First quarter deliveries totaled 92,864 vehicles, a 15.5% increase year-on-year. Xpeng delivered 33,205 vehicles in March, a staggering 268% year-on-year increase, marking its fifth consecutive month with deliveries exceeding 30,000 units. First quarter deliveries surpassed 94,000 vehicles, a 3.3-fold increase year-on-year. NIO delivered 15,039 vehicles in March, up 26.7% year-on-year. For the first 3 months of the year, it delivered 42,094 vehicles, a 40.1% increase year-over-year. Geely Automobile reported total sales of 232,177 vehicles in March, up 54% year-on-year. Cumulative sales for the first 3 months reached 703,824 vehicles, up approximately 48% year-on-year, achieving 26% of its annual sales target of 2.71 million vehicles. Great Wall Motor sold 97,991 vehicles in March, down 2.28% year-on-year. Cumulative sales for the first 3 months totaled 256,800 vehicles, a 6.73% decrease year-on-year. New energy vehicle sales in March reached 25,174 units, up 66.5% month-on-month, with a year-to-date total of 62,558 units. On the eve of U.S. President Trump announcing reciprocal tariffs, U.S. stocks showed mixed performance. The Dow Jones Industrial Average fell as much as 481 points during the session, briefly rebounded by 138 points and closed down 11 points at 41,989. The Nasdaq Composite rose 150 points or 0.9% to 17,449, while the S&P 500 index gained 21 points or 0.4%, closing at 5,633. The Nasdaq Golden Dragon Index, which tracks Chinese concept stocks, closed up 0.5%. Among them, Alibaba rose 0.4%. Hang Seng Index Night Futures closed at 23,150, down 103 points, trading 57 points below the Hang Seng Index cash market close. All seven U.S. tech giants advanced. Tesla surged 3.6%, while Nvidia, Microsoft, Meta, Alphabet, and Amazon each rose over 1%. Apple gained 0.5%. On economic data, the Institute for Supply Management survey showed that the U.S. manufacturing PMI dropped to 49 in March from 50.3 in February, falling below the expected 49.5 and marking its first contraction in 3 months. New orders 45.2, backlog of orders 44.5, and employment 44.7 contracted at a faster pace. Production declined 48.3 and price pressures soared to their highest level since June 2022, 69.4. Meanwhile, inventories rebounded 53.4 and supply deliveries 53.5, indicated continued slowdown in delivery times. Separately, the latest S&P Global Purchasing Managers Index showed that the seasonally adjusted U.S. manufacturing PMI for March remained above the critical 50 threshold for the third consecutive month of 50.2, down from 52.7 in February. This suggests a slight improvement in operating conditions, outperforming the preliminary reading of 49.8, but still marking the lowest level so far this year. According to the U.S. Bureau of Labor Statistics, job openings in February fell to 7.568 million from a revised 7.62 million in January, below the market expectation of 7.63 million. Our stock pick today is Ascentage Pharma, stock code 6855. Ascentage Pharma is a global integrated biopharmaceutical company engaged in the discovery, development, and commercialization of first-in-class and best-in-class therapies to address unmet medical needs worldwide, primarily focused on hematologic malignancies. The group's core products, overembatinib and lisafotoclax, hold global potential for treating major hematologic malignancies, including CML, AML, CLL, ALL, MTS, and MN. According to an industry report by Frost and Sullivan, the combined market size for these diseases is expected to exceed 166 billion US dollars by 2035. In June 2024, the group granted Takeda Pharmaceutical exclusive rights to develop and commercialize overembatinib globally, excluding mainland China, Hong Kong, Macau, Taiwan, and Russia. The group is currently commercializing overembatinib in China, and starting January 2025, all approved indications for overembatinib have been included in the National Reimbursement Drug List. Toclax, a novel BCL2 inhibitor, is being developed by the group for the treatment of various hematologic malignancies. In November 2024, the group's new drug application for Toclax, intended for the treatment of relapsed or N refractory CLL and SLL, was accepted by the Center for Drug Evaluation of China's National Medical Products Administration and included in the priority review process. According to the Frost and Sullivan report, this NDA is the second globally submitted NDA for a BCL2 inhibitor and the first in China for a BCL2 inhibitor targeting CLL, SLL patients resistant or intolerant to BTK inhibitors. If approved, the group plans to launch the product in China in 2025 and seek regulatory approvals in multiple countries. For the year ending December 31st, 2024, the group achieved revenue of 980 million yuan, a year-on-year increase of 342%, driven primarily by option payments from Takeda Pharmaceutical and strong sales of overembatinib in 2024. Overembatinib generated sales revenue of 241 million yuan in China, up 52% year-on-year. The group's loss decreased by 56.2% from 925 million yuan in 2023 to 405 million yuan. In January of this year, the group completed its initial public offering on the Nasdaq in the United States, raising net proceeds of 132 million US dollars. Recommended buy price 43.5 Hong Kong dollars, target price $48, stop loss $41. I personally do not hold the aforementioned stock.